Welcome back to the Trade-Off Podcast. My name is Ryan.
And I'm Alex.
Today, we're going to give you 8 red flags to spot if you're currently with a prop firm and they're going downhill. You want to get yourself out of there. So we're going to give you 8 red flags to look for so that you know the prop firm is going downhill and it's most probably going to end up like Funding Talent and My Forex Funds.
Because we all got stung by them motherfuckers.
Everyone got stung by them back in the day. My Forex Funds were huge.
Yeah.
And Funding Talent were one of the first prop firms to do an 8% profit target. Can you remember? Everyone flocked from FTMO to Funding Talent because there's only 8% profit target instead of a 10% profit target.
Back at the start, there was a real kind of FTMO had a real monopoly on it, didn't they?
Massive.
And then a couple of other companies really started to come into their space. And FTMO obviously, because FTMO used to not let you trade for news, you couldn't hold trades over the weekend. And then when Alpha and My Forex Fund started to do that, FTMO kind of caved. They did say, we're never going to do that.
Yeah.
And then they did.
Yeah, and not having to hold over the weekend, they created the swing account. But what I feel like happened is you had these new prop firms come in, take a lot of business away from FTMO. FTMO then stood the test of time.
Yeah.
These other bigger prop firms shut down. And then what did everyone do? Go back to FTMO.
Longevity.
Yeah. Everyone was like, look, stay with
the
company, which is being true to traders, and it has literally stood the test of time. And they are a bit more expensive, FTMO. However, they are still here, and you get paid, right?
Yeah.
As a trader, your only job is to get paid. So, 8 red flags to look out for. So your prop firm that you're with doesn't end up like the infamous My Forex Funds, which was the ultimate rug pull on thousands and thousands of traders. And at the time, My Forex Funds were the biggest in the space.
Yeah, I had 200,000 with My Forex Funds.
Yeah.
And it was not last year, before August. I remember I took a trade, I cashed out, I got my withdrawal, and then about 3 weeks later...
You're one of the lucky ones.
Yeah. Well, I was actually 1.5% down on it, but so I owe them $3,000.
Yeah. You got one up on them.
Yeah. Fuck you, My Forex Funds.
So one of the first things that we've noticed through our experience using prop firms, now I think it's important to say that not all prop firms are bad. There's some very, very good prop firms out there that do what they say they're going to do, pay on time, they've got their risk tolerance perfect in terms of their rules, what traders they allow in, and the rules are pretty fair and pretty balanced. Those prop firms are doing incredibly well, and we're going to do another podcast on the good prop firms in the space.
And what you should look for in a prop firm.
And what you should be looking for in a prop firm, exactly that. So, number one, what is a bit of a red flag that a prop firm is going downhill and potentially going to go bust? Their customer service starts getting very, very slow.
Yeah.
Typically, prop firm customer services are good, especially at the start. They get back to you very quickly. They've got live chat support or an email or most probably a Discord. Now, once you start getting slower and slower replies and you start waiting days for replies, this isn't good news.
Or, alternatively, if the reply is not relevant to your question at all. If you ask,
a few of them.
If you ask, oh, why have I been denied this, or why have I been denied that, or why did this happen? And they just respond back saying, there's no one available at the moment. It's just a red flag straight away. You know, you got to think these are big companies and a lot of money. If their customer service is not being able to get back to you, they're obviously inundated with some other things, or they're not there anymore.
Yeah. Two reasons why I think the customer service gets slow. One, they've got a lot of people complaining.
Yeah.
So the customer service can't keep up with the influx of people messaging them. And two, they just don't care because they know they're going to go. They're going to pull that rug. That's why. So that's 2 reasons why customer service, we think, starts to go downhill. So keep a lookout for that. If you're trying to chat to someone or their live chat support completely disappears, which you've seen happen in the past, big red flags.
Yes.
Red flag number 2.
Red flag number 2. Sudden influx of negative reviews, especially on stuff like TripAdvisor,
yeah.
TripAdvisor, yeah, go on holidays.
Yeah, mate, go on holiday with your prop
what's
firm.
it fucking called? Trustpilot, that's the one.
Trustpilot is a massive telltale sign because a lot of traders literally go straight to Trustpilot.
Yeah.
They've had a good or bad experience.
You've got to read between the lines though. It's important to think with Trustpilot, right? Because there's always someone that's going to complain. Let's, for instance, say that your prop firm has a no hedging rule or can't hold free news. Someone's denied a payout. The first thing they do is, they denied me a payout.
Yeah, this is very true. This is very true.
You've got to take everything with a pinch of salt. However, if you're getting sustained amounts, of the same kind of...
The same complaint
about
the same
being refused payout for no reason, or bad fills, or not getting a payout, or delay on your payout.
Customer service not getting back to me.
I can't remember which one it was, but there was... what was it called? One of our guys, James Doyle, was with them. And they actually They owed him about £15,000, and they got back to him and said they were going to make a payment plan to pay him. They did, but they paid him his payout over like 5 months.
Yeah, that's because they need more money coming in. Don't forget, they're most probably one of the prop firms that are using demo accounts. So they've got a lot of good traders that have come in at the same time, passed the challenges and got funded. Then all these good traders are all asking for payouts at the same time. They can't afford to do it because they need traders to fail the challenge to be able to pay out the good traders. That's why they made a payment plan. But fair play to them for making a payment plan. A lot of prop firms just wouldn't have paid them out. So that shows
it was like
that
my funded trader or something like that. Or...
Yeah, there's a few with my at the start now, isn't there? I stay away from anyone with my at the start. Yeah, I just stay away from them. So that is 2 so far. Customer service is getting slower, and there's more and more negative reviews, which is a very obvious one happening on Trustpilot. But as Alex rightly said, you need to read in between the lines, because a lot of people bitch and whine about things that they should have read in the rules, and then when they fuck up and they realise actually that was one of the rules, they just want to blame everyone. They give a shit review. Right.
So always someone else's fault.
Always someone else's fault. That's the easy thing about trading. People can just point the finger at anyone, but at the end of the day, it's you that pressed the button that said buy or sell.
If you didn't read the rules, don't be upset when you don't know how to play the fucking game.
So number 3 is if you're getting payouts denied, or other traders are getting payouts denied with no real reason. So they can't even give you a specific reason which relates to their rules as to why your payout was denied. Massive red flag.
I've had a few in my group that have been using different prop firms and stuff like that especially over the last kind of 12 months. And when they started to go bust, they were seeing things like, oh, we're not paying out because your risk was too high on certain trades, right? Yeah. They've responded with a categorized email explaining, this is how much I risked. This is when I risked it. I never risk more than this amount at any one time. And they've basically just shown the prop firm that they're lying, and then the prop firm just don't get back to them.
They just won't get back
and
to them.
Within a few months, boom, they're gone, right? If a prop firm is saying that you've breached a rule, then like any contract that you've signed up to, they should be able to categorically show you exactly what rule you breached, how you breached it, and where you breached it. That's done. If they say you breached it at this time, on this day, with this lot size, as per section 6.1 of the contract, you're fucked. Yeah,
this exact trade. Right?
But when they just get back to you with very vague emails, or they just say that you breached a thing, or as another one, when they start changing the goalposts. Yeah. When you sign up to a prop firm, so those of you that haven't been funded before you get given your live account, or before you get your first payout, depends on the prop firm, you have to sign a contract, right? Depends on what round they do it. However, once you've signed a contract, as you know, you can't just have the contract change. You'd have to sign a new contract. They'd have to send you an amended contract, right? What a lot of these companies do is they move the goalposts. So what it was in the contract that you originally signed is now different, and they use that to deny your payout. But you never signed that new contract. So that's a big, big red flag if they're moving the goalposts.
Yeah, watch out for that. Payouts declined without reason or a fake reason. And this is getting more and more with a specific prop firm at the moment, which we're not going to name. And we're seeing that specific prop firm potentially start to go downhill. However, we're waiting for a few more red flags before we do a podcast about them. So we might be able to give you guys the heads up. But at the moment, we're giving them the benefit of the doubt to see if it is just a bit of a lapse in maybe staff or a lapse in judgment from them. Yeah. So we're just going to wait, because this prop firm's been around for a while and they've been pretty good. So we're giving them the benefit of the doubt. However, if other red flags that we're going through now start to appear, we will do a podcast on them. Yeah. So number 4, bad trade feels. This is massive. Yeah. What will happen is you go to enter your trade, you've entered your trade, bang, straight away you're like 0.5% loss or more. You're like, whoa, how's this possible? That's not the price I entered in at. What they're doing here, and this was a My Forex Funds trick, and My Forex Funds actually got exposed from doing this trick. They put you on a different category within their prop firm. So say if you are a good trader, they can see you're a good trader. They don't want you to get payouts. So they put you in like a different category. Then they put you under a profile, which will give you bad feels to then put the edge in their favor and the edge against you. So it can be very, very hard for you to make money. So you can't get those payouts.
For those of you that don't understand what a bad feel is, essentially when you enter a trade, you get the contracted price when you push buy or sell. It will show you the trade you're entering and what price you're entering at. When we say bad feel, what happens is you'll enter at a worse price. Okay, so it's a bit like taking a bet with the bookies. You do it on your phone, you place the bet, but when you actually look at the bet, you've got different odds. Yeah. Right? They're not in your favor, they're worse odds, which means you're not going to earn as much money from the trade. You've started off in a negative, in a worse position than you should have been. And the reason they're doing this is because it will bring you closer to your stop loss,
Yeah.
which essentially means you've got less wiggle room or less movement before you hit stop loss. So there's a much smaller chance of you actually making money from that trade, which is what they're trying to do. They're trying to stop you from getting a payout.
Yeah. So for example, if you have, let's say, a 30 pip stop loss and you enter the trade and instantaneously, as soon as you enter that trade, you go 15 pips into drawdown, you're now 15 pips away from your stop loss, not 30 pips.
You're 0.5% now in loss.
You're straight in a loss. And you're also an extra 15 pips away from your take profit. So you can see at the massive disadvantage it puts you at. Now, this is a very extreme case. You won't see this happen a lot of the time, but it could happen over the odd trade here and there. That's when you're going to start to see it happening. Then if other people start seeing it happening as well, you need to think about moving away from that prop firm. If you've got a withdrawal, get that withdrawal as quick as you possibly can and get the money in your bank.
And this moves us on to the next point, which is having slippage on high impact news. So it's pretty much the same thing. Okay. What happens is instead of getting a bad fill, you get an increased spread when there's news. Now that's to be expected. That's on the risks that come with holding trades for news, right?
Yeah.
Let's say you're 15 pips in profit and the spread widens from 2 or 3 pips to 15 pips. You're now back at break even. Okay. That's something that's to be expected. And that's something that you would often factor in. For instance, if you were trailing your stop loss and then there was NFP, you might put your stop loss back to break even to give yourself some wiggle room before you carry on with the trade so you don't choke the trade. However, if you're seeing things like 30, 40, 50 pips of increase in spread, that's extreme.
That's not normal.
No. And what they're doing is they're trying to get you out of the trade because you're already in profit or because there's lots of traders that are back in this movement. They don't want to pay out on those trades. So therefore, they basically stack the odds in their favour, take you out of the trade. Then when it goes in the other way, it keeps going in your favour, what do people do? They try and find a way to get back in again. They get back in with a bad feel. So you're just constantly having your pants pulled down.
Yeah, it's not good. And when the trade goes against you with high impact news, they just won't honour the stop loss price. Yeah. So say you've had 1% risk, what will happen is the trade will literally just go straight through the stop loss. So you could end up getting out with like minus 3% instead of your initial minus 1%. So now your risk management is way off.
And we see that a lot. Slippage happens a lot when people have moved to break even and they think that it's safe to leave the trade through news. So when you move a trade break even, for those of you that are new to trading, essentially what you do is you remove any risk from the table. If you had £1,000 risk, you moved your trade to break even. Essentially what you've done is you've taken that £1,000 risk, put that £1,000 back in your pocket. The worst case scenario now is you go home with nothing. All right. What happens is with the slippage, it will actually gap your break even. So you'll actually lose money even though you should have been safe. It will jump past your stop loss because it moves too quickly, apparently.
It's just another little prop firm trick. And unfortunately, a lot of traders that are using prop firms have never actually traded with their own money in their own broker account. Yeah. So therefore, they don't actually know the difference of what to expect from an actual broker that they've put their own funds in. They would know that, oh, this slippage isn't normal. Exactly. But they don't know that it isn't normal because they can't compare it to an actual broker that they've deposited their own funds into. So these things happen to some traders. They're like, oh, that's just bad luck on me. No, it's not. It's actually not normal. Your feels should be correct pretty much 99.9% of the time. Your stop loss should be honoured pretty much 99.9% of the time. You know, you might get a tiny bit of slippage with a normal broker that you put your own money in, but nothing in the realms of 2, 3, 4%. That's just crazy. And that is now manipulation, which is fraud from the prop firm. So, number 6, and we see this a lot with the prop firms, especially the ones that need to get money in quick. Huge special offers. 50% off our 100k account. Plus, if you pass, we're going to give you double your challenge fee back. They can't afford to do that. They're hoping you're going to fail. They need to get a quick influx of sales done because they've got some big payouts coming up. So they do these huge special offers, which are ridiculously big, and they sound too good to be true because they are. You're going to start getting an influx of people coming in. They're hoping you're all going to fail so they can use your funds to pay out the traders that they need to pay out. It's a big, big telltale sign.
And a massive reason that prop firms actually make money is because of failed challenges. I think there's a statistic that actually comes from the prop firms, which shows that out of all the people that take challenges, get funded or get involved in a prop firm in any way, shape or form, just over 1% of all of those people actually ever get a payout. And that's not because they've been defrauded or they're being tricked like we're talking about here. No. That's even with the legitimate prop firms, right? So when you've got a business model which only 1% of the people that try and buy your product actually ever get a payout,
you've got a good business model.
You've got a good business model because it means 99% of people that are giving you money and never getting that money back. So for every 100 people that buy a challenge, you're keeping 99% of their challenge fees, and the other 1% person's going to get a couple of payouts or, you know, long-term payouts, but they're just making that money from the constant challenge purchases, which is nothing wrong with. That's a good business model. They're not doing anything fraudulently. They give you fair amount of rules and you've got to pass it, right? If you can't pass it, that's on you. The problem is when they're not keeping their end of the bargain.
Yeah, and I think it's important to say that prop firm challenges, etc., if you actually are a trader, you come prepared, you have a strategy, you stick to your own strategy rules, so you've got an automated trading system, you're likely going to pass a prop firm challenge and you likely are going to get a payout.
100%.
But there's a lot of traders that just take a punt. They actually can't trade. They go, oh, I could do with 100K.
Yeah.
I spend $500 on a challenge.
That's it.
They try and pass. They're not going to. They try and wing it. They go in with a massive lot size, no risk management, and they fuck it up. They're the sort of clients that the prop firms love. That's why the statistics sound crazy when you look at a prop firm that only 1% of people actually get a payout. However, if you actually look at the statistics of trading, only sort of like 5% of people can actually trade properly. Because you've got the other 95%, one, can't control their emotions, two, don't actually have a proper strategy that they're sticking to, a blueprint that they're actually following, which is what a trader should always have. If you don't have that, you're going to fail every time. All you need to do is stick to an actual plan. So we know a lot of traders in our trading group that are passing challenges all the time. They're getting paid all the time. Why? Because they're actually sticking to the plan. That's all you have to do.
Someone's got to be in that 1%.
Someone has to be the 1%.
And I think it's really important to say that prop firms aren't bad. The thought of a prop firm, the idea of a prop firm, and most of the prop firms are really good because
it's just a game.
Exactly. Before prop firms, trading was like really out of reach for a lot of people.
It was,
because they didn't have a large amount of funds to start trading with. If you've got £1,000 to put in a trading account, you're not going to be able to live full time off of your returns. So, other than going and getting finance from somewhere, from either a hedge fund or an investment company or a loan or selling your house, whatever it is you want to do to raise the capital, you couldn't have enough capital to trade. So prop firms have really made it accessible for everyone. I use prop firms. I fucking love them. I think they're great. However,
for the record, I love prop firms. I think they're great.
But however, it's just like anything. There's always a bad apple. There's always when you've got something good, there's always some shady motherfuckers who go, how can we use this to our advantage? How can we kind of jump on the bandwagon for this, try and make some money quick, and then do a rug pull? Happens with everything.
Absolutely everything. And I'm pretty confident that most of the people that we see in our group that we are talking to on a daily basis, they're all using prop firms to their advantage, all 100%. Of them. And they've had good experiences. Some have had bad experiences. They've gone to some of the less desirable prop firms. And with me and Alex now highlighting these red flags, hopefully you guys can avoid those type of prop firms and go to the good prop firms. You'll have a good experience as well. So point 7 is a very quick increase in marketing. So what you usually see is before a prop firm starts going downhill, they increase their marketing massively, almost overnight. You start to see them everywhere have crazy special offers, right? But not just like on their website. You're going to see influencers talking about them. They're going to be on podcasts. You're going to see ads popping up on Facebook, Google, Instagram. This is a big red flag because what will happen is with the good prop firms, word of mouth. All they need is word of mouth.
Yeah, that's it.
Word of mouth just gets them out there. And they might do an ad, but their ad isn't promoting some crazy special offer. It's just promoting them as a prop firm. Yeah. This is what we offer as a prop firm. This is how many clients we have, so on and so forth. It's not a crazy ad trying to say something which is too good to be true. So if you see a massive increase in marketing, this isn't a good sign. This is a prop firm usually trying to do a crazy special offer, get it out to absolutely everybody so they can get a massive quick influx of cash because they're cash poor. And if they're cash poor, that means all they need is a few more good traders getting big payouts and they're going down. They're a sinking ship.
Essentially just a Ponzi scheme. They're trying to bring money in so they can pay other people out.
Yeah.
And it's just a never-ending cycle. And eventually, it catches up with them, and then boom, they go dead overnight.
They go dead overnight. Literally, it's a race to the end. And that's all some of these prop firms are doing because they haven't got the correct rules in place and they're not using the correct risk management on the back end. And therefore, they literally are just a sinking ship from day one. Yeah. And these red flags highlight those sinking ships. Number 8. And this is actually quite a big one. A lot of people overlook this. And when you go to buy a prop firm challenge, you should look at this straight away.
Yeah, this is something that you should be looking at before you buy a prop firm, not that you're experiencing when you've actually bought one. This is something you should be looking at to check before you even purchase a prop firm account.
And that is make sure they have a no hedging rule. So if you're going to hedge, basically, if a prop firm allows you to hedge, you could bust a prop firm most probably every single time and then get a payout every single time. So hedging is when you have two prop firm accounts, for example, or you can do it on the same prop firm account, but that wouldn't get you as far.
No.
However, you can have two prop firm accounts, you can go buy on one, sell on the other, right? The prop firm software is going to detect that you have two prop firm accounts and you're doing that, and then it's going to breach your accounts if it has the no hedging rule. So if you imagine I go in gold buy now and gold sell, and gold goes up and I just let it run, I'm going to make money on the buy, right? But I'm going to lose money on the sell. So if I just let that run and it goes very well in my favor, I'm going to fail one account, but pass one at the other account.
Yeah.
Perfect. I've now got a funded trading account, and then I can maybe try and get another funded trading account and do the same thing. And I can just keep trying to hedge my way to a payout. Traders do that. And they have done it in the past with prop firm accounts that do not have the no hedging rule. And they're just literally playing the game. They're just manipulating the system. So smart prop firms, they won't allow this.
No.
Because you're gaming the system, and they know that it's possible to do that.
A lot of them will also have lot size restrictions. So they're not going to let you put 100 lots on gold.
Yeah.
Right? They want you to be trading with a certain amount maximum risk. Yeah. They want to make sure that you are trading and not gambling.
Yeah.
If you're acting like a gambler and you're going gung-ho, even if you make money, don't cry when they say, we're not paying you out, right? Look at the rules for the prop firm. If they want you to gamble, or they're allowing you to gamble or hedge, the chances are that they don't care, because they're not going to pay you out anyway.
They're not going to pay you out anyway.
So it doesn't matter.
It doesn't matter. That's why they let you do all these. So the prop firms that have the more relaxed rules, they're the ones you've got to be a little bit careful with.
Yeah.
Because it's unlikely you're going to get a payout in anyway. So overall, we've got 8 red flags, which are customer service starts to get much, much slower. You're going to get a lot more negative reviews on Trustpilot. That's always a massive telltale sign. Now, don't forget, like Alex said, read between the lines with the negative reviews, because some of them are just people bitching. But if you've got a lot of the same negative reviews, then you know that it clearly is a problem.
Yeah.
Payouts decline without reason or with a fake reason. You've got bad trade entries, which is a bad trade fill. You're going to get slippage. You've got the huge special offers, which sound too good to be true. That's just to rope people in and go,
Said
wow.
you buy one, you get one free.
Literally. Mate, I've seen that with a prop firm. Buy one, get one free. Come on. What prop firm's going to do that? Buy a 100k account, we give you a free 100k account. You know, and
I'm gonna let you hedge it.
And we're gonna let you hedge it. Literally, what I was about to say. Come on, guys. We need to use a bit of common sense as well. Quick increase in marketing, and then you've got the massive marketing promotions going out at the same time. And of course, you need to see a no hedging rule. Overall, though, right? These are red flags to look for from the bad characters, all right, in the industry, the bad prop firms. These are to help get you guys out of trouble and help you make a decision before you buy, or if you're currently in with a prop firm and you've got a withdrawal, get that withdrawal out of you. You're starting to see some of these 8 red flags.
I guarantee someone that's watched this will still buy a prop firm challenge from a Nigerian forex company called Hedging FX.
Yeah,
and then wonder why they got fucking cancelled.
Yeah, hedging FX, buy one get one freeze.
Yeah.
You've got it all going on. Yeah, mate. You got to use a little bit of common sense as well. Reading between the lines, and you'll be absolutely fine. And there's some great prop firms out there. So, like I said, me and Alex, we're a big fan of prop firms.
Been using prop firms for 2020, I think, is when I got the first FTMO account.
Yeah, it was FTMO back then, because there was like the 5%ers, and I think it was like Blue FX or something like that before them. But the rules were crap. The leverage was ridiculously low. You literally could never pass. And FTMO changed the game.
And before that, there was a couple of companies in which you could rent a live account, but it wasn't like 100 grand. Yeah. I've seen a few that you could rent like a $50,000 account, but you paid them like a service fee per month, and then they took a percentage as well.
Yeah, and again, the odds were stacked against you though. It's very, very difficult.
Very difficult.
But FTMO changed the game. I mean, why would you not want a 100k account, which is only cost you like $500?
Yeah, and you get the money back if you.
Yeah, your only risk was $500. So even if you lost the 10%, your only risk was still $500. It sounds too good to be true. It isn't. It works. We've got people receiving payouts every week. We're getting payouts. There are good prop firms out there. Use them because it's a great way to accelerate your trading. I absolutely love them. Alex loves them. But watch out for the bad characters. Yeah. And hopefully these 8 red flags will help navigate your way through the murky waters, which are prop firms. So guys, as always, thanks for tuning in. We'll catch you on next week's podcast. Every Friday, as usual. We'll speak to you then.
See you later.